Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Looking at PCLN NVDA TSLA NFLX CMG. So PCLN continuation and all-time highs. So this consolidation was perfect timing. We were watching the SPY tightening pattern. It got a bull break today, and the bulls were ready to go for another leg to the upside. So our target was 1950 psychological, bounced right above that level and pulled back a bit. And now we're looking up at 2,000. So the SPY bulls have not hit an all-time high yet, which we are anticipating to happen in the fairly near-term future. So we will continue to look for the PCLN bulls to remain in control with higher lows and higher highs. We have seen 6 green days in a row, so we have to keep that in mind and be watching for potential further short-term consolidation. And there is also a gap now to be watching at 1933 on the daily time frame. That being said, we're above the upper Bollinger Band. The bulls have no resistance here, and we are looking very strong. And although I just said the bulls have no resistance, there is a resistance level. It's the weekly upper Bollinger Band, but that's it, besides psychological resistance. But this is a pretty key level to watch because the last time we had all-time highs, we did reject 2 weeks in a row from the upper Bollinger Band. So here we are again, 1950, and that could be the point where we do take a breather here and consolidate a bit. And the upper Bollinger Band is not moving very rapidly, so even next week, it's not going to be much higher than this. We are on the verge of a bullish MACD cross here on the weekly time frame, but keep your eyes on this weekly upper Bollinger Band. We have closed above it plenty of times in the past, as well as rejected from it plenty of times in the past, so it'll be very interesting to see how we close this week relative to that level. NVDA. So I have been saying that I am anticipating a lower high to form compared to this level of 161.74, and it did not happen. The bulls are way stronger than that. This is an extremely impressive move. So I was wrong on this, but I'm okay with being wrong on this because the odds in terms of what more likely than not happens from here, the odds very greatly favor that a lower high would form. And I can say that because the bounce that we saw ended up being over 15% in 6 days. That's obviously not common. So the bulls ran with it and pushed through that resistance. It shows tons of strength. It shows we're very extended to the upside, pretty darn overbought on the hourly time frame. But we closed at the high of the day, and the bulls are still in control, and we're looking right back at the all-time high. So certainly not going bearish against the bulls here in NVDA. We're not seeing any signs of weakness that would dictate going bearish. But again, risk to reward up here favors risk, especially in the short term. So I would have missed a lot of the move. I did miss a lot of the move to the upside today, and that's because I did not like the gap up situation. After seeing 5 green days in a row and a significant move and approaching a key resistance, I didn't like that gap up situation. That's a gap up that I would not buy. And I'm perfectly fine looking at that and saying, oh man, I missed a big day, because again, I'm going by statistics and odds. And if you're looking to do this in the long term and trade for 10 plus years, you would not want to be buying there more often than not. And then, maybe 1 out of every 10 times, 1 out of every 7 times, whatever it is, where it does end up going the other way, you're not losing money, you're just missing out on money. So that's an ideal situation to be in, where worst case scenario, you just don't make profit and you miss a move. I personally can very easily get over that. I don't have the FOMO. I don't have the emotions that are saying, oh man, I should have done this, because I know what I should have done after watching this chart pattern play out, hundreds of times in the past. The vast majority of the time, we would set a lower high there. But either way, congrats to the bulls. Strong close at the highs the past 3 days, and we are still looking strong. And there's very little resistance until 168.50, that all-time high. We'll watch the upper Bollinger Band resistance tomorrow. The weekly chart, bull flag, looking for continuation, looking great so far. The market strength, certainly aligning here. Semiconductor strength is still present, and we're looking for all-time highs sometime in the near-term future. Tesla oversold bounce continues. A little bit of a weak candlestick, but we did close fairly close to the high of the day. We did reject from the 8-period exponential moving average resistance, so the bulls will test that level again tomorrow. If we can see a break of 333.10, the high, we know the bulls still have some momentum left in their tanks. And if, well, not in their tanks, because they don't have gasoline tanks. How about that? So if we can break 333.10, we'll look for some continuation. But If we cannot break that level, we will look to consolidate, and we're going to have to pull back and form a higher low and then a higher high for this bounce to have significant recovery. Otherwise, if we cannot form that higher low and higher high, this is going to be a short-term bounce that keeps the bears in control. That being said, with the market strength that we're seeing, I would anticipate the bulls are able to form a higher low and then a higher high. We're just going to have to watch what the volume looks like on that consolidation. Very solid bull volume on the bounce so far. You can see the climax of volume to the downside the last 2 bear days. But in terms of the 4 days of bull volume that we're seeing here with lower wicks and strong candlesticks, that's pretty solid. And that does favor the bulls, in my opinion, for the ability to form that higher low and higher high. Weekly time frame, bullish reversal candlestick off the middle Bollinger Band. 2 weeks in a row holding this level and looking good so far this week for that reversal candlestick to form. Netflix on the daily time frame, extremely strong candlestick. We did see some weakness earlier today, and at one point with about an hour and a half left of trading, we were close to a bearish reversal candlestick on the daily time frame with a long upper wick. And then really in the last half hour of trading, the bulls kicked it into second gear and closed at the high of the day. So I'm still watching resistance here as well at 159.97. We are on the verge of testing that level, and we will likely test it tomorrow. We're coming right off of our low from 144 up to 159, and that is a very significant move, about a 10% move here in 5 days. So again, if you are in a position already for the bulls, congratulations, you're very happy, and there's no reason to sell yet. If you are looking to enter a bullish position, you want to wait for consolidation. And if you miss another green day to the upside, that's one that, again, you just got to shake off and say, statistically speaking, we do not see 6 green days in a row plus 10% very often. And if we miss that move 1 out of every 10 times that it happens, that's perfectly fine with me because, again, it would be a bit of an anomaly of what we would normally see. So that's a key resistance level. Again, I do not like bullish entries up at this level unless you're doing some quick scalps for day trading. But resistance after 160 psychological, which is right where that high is, there's not much. We're just looking right back towards that all-time high. So get over that level, and we will look for higher lows and higher highs to begin forming as we approach that all-time high. Keeping in mind we do have earnings seasons approaching, so that's going to be a factor as well. Weekly time frame, bullish reversal candlestick last week is being confirmed. Bulls trying to regain the middle Bollinger Band and exponential moving averages as support. And so far, they're off to a great start to the week. And the week's now half over at confirming that bullish reversal hammer. CMG, bullish reversal candlestick from oversold conditions. Have to confirm this candlestick tomorrow with a solid green day. If we do not see that, we will be looking at the potential for further downside, just like we saw back in early July. So exponential resistance is very key. Must see a green day and a close over 400. Weekly time frame needs a lot of work. To see a bullish reversal candlestick, we have to close over 405 on the weekly time frame to see a bullish reversal candlestick, a hammer, form on the weekly. 2 days to do it, so it is certainly possible. And watching for a close and follow through and confirmation tomorrow. So I appreciate you watching. We'll check back in tomorrow. See you then.